Hey everybody, one of the biggest complaints I get when I do a video on my favorite stocks to buy is that I only talk about two or three. Some people want more choices. I did a video about three dividend stocks I like, and a lot of the comments were, well, what about this one? What about this one? What about this one? I thought you liked this one. And it's true. I can't really narrow it down to just three. So with that in mind, I wanted to do kind of a top 10 list of my favorite dividend stocks to buy right now. So before we get to that, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now and some great information from my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube, and you will really enjoy what you see there. Again, fool.com/Frankel. So let me share my screen real quick. So just kind of general thesis here. With the Fed starting to lower interest rates, we could be entering a pretty great period for high quality dividend stocks. I don't really want to turn this into an economics lesson, but generally speaking, dividend stocks are much more sensitive to rising and falling interest rates than their non-paying counterparts. Um, Essentially, investors expect a certain amount of yield um, from their investments, especially risk-free investments. When things like CDs and treasuries are paying 5%, dividend stocks don't seem as attractive. Um, when the yields on risk-free investments fall, dividend stocks look more attractive and attract more investor capital. That boosts their prices, and it's just generally a good environment for dividend stocks. So, in no particular order, and believe it or not, these are not all real estate companies. If you've watched my content, these are my 10 favorites right now. So, I got my real estate companies out of the way first. The first five are real estate investment trusts or REITs. So, just to kind of run through my top 10, I'm going to go kind of quickly here just because there's so many stocks. Number one is Realty Income. This shouldn't come as a surprise. It's the first real estate stock I ever bought, my largest real estate stock in my own portfolio. Pays a little over 5% in monthly installments. They actually have a registered trademark on the phrase the monthly dividend company. They own more than 15,500 properties, all single tenant. About 80% of them are occupied by retail. You see right there, drugstores are in the picture. A lot of drugstores are in the portfolio. Walgreens and CVS are both big tenants. Dollar stores are a big component of theirs. It's properties that are generally not recession prone and that aren't really vulnerable to e-commerce disruption as much as most retailers are. So really built for steady growing cash flow, been a great performer over the years, and I think it will continue to be. Number two, Vici Properties, ticker symbol is VICI. They have a 5.2% dividend yield. They are the gaming REIT. They own a bunch of the real estate for some of the gaming properties. If you've ever been to Las Vegas, you've probably been in one of their properties. They own the real estate for the Venetian. They own Caesar's Palace. They own the MGM Grand, Mandalay Bay. The list goes on. They own a lot of regional gaming assets. They own the Borgata in Atlantic City. They own MGM National Harbor. The real estate, they don't operate the casinos, but so MGM Resorts is a tenant of theirs. Caesars Entertainment is a tenant of theirs. They focus on gaming and other experiential properties, and really great business there. Number three, this is one of the, you can argue this is one of the riskier ones on the list, EPR Properties. Ticker symbol EPR, very high dividend yield, also a monthly payer, 7% yield right now. They focus on experiential real estate. Now, that means things like water parks, ski resorts, eat and play businesses. Topgolf is one of their largest tenants. But it also means movie theaters. That accounts for roughly 40% of their rental income. AMC Entertainment and Regal are two of their biggest tenants. And if we're being honest, the future of the movie theater business is a little bit up in the air at this point. Um, Now, movie operators are doing a great job of trying to figure out how to kind of pivot to the new reality. Like they're showing some live sporting events in movie theaters. They're bringing back some old movies for special showings that are bringing people in. They're doing a good job, but it's still a little bit uncertain, and that's what kind of scares people about EPR. Regal just went through bankruptcy, which ended up being resolved in EPR's favor, but that's not a guarantee that that's always going to happen. Um, Number four is Prologis, relatively small dividend yield, 3% yield. This is the largest real estate investment trust in the world. They focus on industrial properties. If you ever see one of those giant Amazon warehouses, Prologis owns a lot of them. So really just growing need for this type of property with e-commerce still rising, and very just steady compounder over time. Number five is Easterly Government Properties. This is the one that trades most like a bond. It's very dividend oriented. Not really built for share price growth, but it could in a falling rate environment. Ticker symbol is DEA. And Easterly Government Properties, they own a lot of real estate that is leased to a bunch of different government agencies. They're a big landlord for the VA, for example, the Drug Enforcement Agency, DEA, where they get their ticker symbol from. That's another big tenant of theirs. So those are the 5 real estate stocks that I would put in my top 10 right now. So moving on to non-real estate companies. Um, this is one of the lower payers on the list, but it's one that I think is a great opportunity right now. Capital One Financial. Uh, Most people know them for their credit card business. They are actually a full-service regional bank. They have a pretty nice branch network in the Washington, D.C. area and the surrounding areas. They're planning to acquire Discover, which would give them a nice competitive advantage of having their own payment network. Really interesting business, and one of the few bank stocks that actually trades below its book value right now. So that's one that's toward the top of my watch list at the moment. Number 7 isn't a stock at all, but it is a fund, the Vanguard High Dividend Yield ETF. If you don't want to try to pick individual winners of the falling rate environment, ticker symbol VYM. This is an ETF with a almost 3% dividend yield, and it consists of mostly large stocks that have above average dividend yields. Like JP Morgan Chase is an example of one of its top holdings. So if you don't want to do stock picking, that is a good one to look at. Number 8, Brookfield Asset Management. Ticker symbol is BAM. Dividend yield is 3.4%. This is the alternative asset manager. They invest money on behalf of clients in things like real estate, alternative energy, infrastructure, and they have hundreds of billions of dollars under management, and they are really, really good at what they do, and there's no shortage of demand for non-stock market investments right now, and that should continue to grow in demand for years to come. Great track record of delivering total returns for investors. Number 9, smallest payer on the list, Walt Disney Company. I just think this one's a great opportunity, not necessarily a yield play. I just think it's really undervalued at the current levels. You don't really need an introduction. They have their theme parks, they have a movie studio, they have TV networks, they have the Disney Plus and Hulu and ESPN Plus streaming services. A lot of profit potential. Bob Iger's doing a great job of figuring out how to make all of its businesses profitable. A lot of recession fears, especially in terms with the theme parks, that maybe they benefited a lot from the post-COVID surge in tourism spending, and that could cool off. And it might a little bit, but this is still a great business that's worth owning for the long term, especially at the current level. Last but certainly not least, number 10, Ally Financial, ticker symbol ALLY. This is a 3.5% yielder. It is a bank. It's an online bank. It's focused on auto lending, and that makes sense because it spun off from General Motors shortly after the financial crisis. It was GM's financing arm. Now it's kind of evolved into a great online bank with a lot of, several different types of lending. It offers consumer deposit accounts, savings, a great online checking account. It's got an investment platform, really a full service online bank, and a really profitable company. Great margins on the auto lending business right now. And so that's my top 10 list. I would love to hear what you think about any of them. What stocks should I have on my top 10 list? Feel free to comment with those too. And thanks for listening. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.